Podcast Network Asia.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
How's it going, investors? Hi, I'm Anjz with a Z, an equity research associate from First Metro Securities. In today's podcast, let me share with you the Philippine stock market wrap-up for January 2025. For end January, the PSEi declined by 10.20% month-on-month to 5862.59. Likewise, the PSEi declined by 10.20% year-to-date. Let me enumerate a couple of economic data that affected the market. Amid the shortened trading week in the first week of the month, volume started to pick up as investors adjusted their portfolios to start the new period afresh. Optimism surged as the country's Manufacturing Purchasing Managers Index, or PMI, rose to its 2.5-year high at 54.3 in December 2024, driven by robust performance of both output and new orders. The succeeding week, the PSEi ended lower as investors remained cautious following the December 2024 inflation print reported to be at 2.9%. While it was still within the 2 to 4% target range and 2.3 to 3.1% forecast of the BSP, the inflation rate exceeded the consensus forecast of 2.6% and marked an increase from November's 2.5%. Mid-month, the local bourse struggled with heightened risk aversion ahead of U.S. President Trump's inauguration as the 47th U.S. President and the release of the U.S. December 2024 inflation print. The main index continued to slip as concerns over potential GDP growth shortfall dampened sentiment. NEDA Secretary Balisacan cautioned that 4Q24 GDP growth might fall short of expectations, citing typhoon-induced agricultural damage and operational disruptions. On the global front, market optimism followed the inauguration of the new U.S. President Trump, particularly due to his initial statements advocating for less-than-expected tariffs on China to ease trade tensions. In the last week of January, the index marked its lowest close since October 2022 due to weak macroeconomic data and PSEi rebalancing results. The 4Q24 GDP print fell to 5.2%, below Bloomberg's 5.8% estimate and the government's 6 to 6.5% target, due to weather disruptions and delayed effects of monetary policy hikes. Additionally, February PSEi rebalancing led to declines, as index weights were adjusted for AREIT and CBC. These new entries' higher market capitalization compared to removed stocks Nickel and Wilcon contributed to selling activity. Amid the bearish sentiment that continues to dominate the Philippine equity market, how do we position? Notably, we had anticipated a volatile path towards our base case index target of 7,600 by end 2025. In light of this, we reaffirm the following key investment positives. First, recovery is still going, with 4Q24 GDP indicating an acceleration based on seasonally adjusted quarter-on-quarter basis. Second, valuations are extremely attractive, with market ERP at 516 bips or plus 1 standard deviation of historical mean, poised for potential compression amid improving economic fundamentals and election-driven tailwinds. Third, notable progress on key positive risk events are underappreciated. The proposal to lower the sales transaction tax to 10 bips has passed the Senate, and the Philippines is now one step closer to delisting from the FATF gray list, which bode well for investability and foreign visibility. And fourth, the Secretary of State Marco Rubio reaffirmed U.S. ironclad commitments to the Philippines under the Mutual Defense Treaty, as well as expressing openness to deepen security cooperation and expanding economic ties. In summary, the path to 7,600 will be volatile, bringing opportunities to the table. The current level should prove to be a very good entry point for those with a time horizon of 12 to 24 months. Our model portfolio favors an early cycle playbook focusing on index glamour names and midterm election winners that will benefit from the acceleration of economic activity. AI-driven efficiency gains and friendshoring beneficiaries are also preferred. Following these themes, our top picks for the year are Ali, BPI, BDO, Converge, JFC, Pure Gold, RLC, RRHI, SM, and SMPH. And that's it for today's podcast. Thanks for tuning in and have a profitable year ahead.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the FirstMetroSec family.
FirstMetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and FirstMetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of FirstMetroSec. FirstMetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.